Well, g'day there, traders and friends, market enthusiasts and participants right around the world. You are here with James on behalf of Pivot Point Trading. Thanks a lot for joining me. As at the close on Monday's trading session, again, we've seen the continued selling pressure stemming from Friday's historic Brexit vote. The Dow Jones Industrial Average today down 259 points. The S&P 500, I believe, closed down very close to 37, 36.76. And the market of the three, which took the biggest sort of belting today, was the Nasdaq, down 113 points. We've established some opening gaps, or at least some continuation types of gaps, which are very important. And I'm going to explain to you, obviously, what I'm looking at moving forward as we round out this week and move further into this week and also into July 2016. But from the onset of this recording, it's important for you to understand that we are breaking, again, structural support, which we've been setting up for about 3 months right now. We've taken on a tremendous amount of hedging up at these locations, and we've positioned ourselves net short, which turns out, as at the close of Monday, to be highly profitable. And the good news for people who have listened to what I have been speaking about for a number of months since the February lows and since we've been expecting this pseudo rally to take place, is that this is just the beginning of the selling wave of pressure. So if you believe that Friday and Monday has been, disastrous for the market in terms of the market moving lower, in my humble opinion, this is just the beginning of a bigger move. And I'm going to explain to you how I see this unfolding over the upcoming days and weeks ahead. Before I get there, let me just recap some of the individual trades which we've been following and mapping out in that pro analysis class over the weekends, mostly throughout June, positioning ourselves on the short side. We have had to remain very disciplined, very, patient in terms of the trade setting up. But when you see these pretty decent, or at least momentum flow back into the market, and to see the shakeout finally happen, breaking down below structural support, that's where you see the biggest moves and the most material moves in individual equities. And we've positioned ourselves really well to take advantage of this selling opportunity. So let me just recap some of these stocks before I move into the overall market analysis. Apple, we've had a number of short triggers, or at least short sells. 95.57 was the original one. This is dating back to, what date was it? It was the 17th of June. We had an additional re-entry at $95.19. We've broken down a couple of bucks, over $3.50 from the original target. We're here at 92.08. First target is 90.45, so we're very close to hitting that original target. Let me move into Caterpillar. Caterpillar's been another fantastic trade, which is just, in terms of technical analysis, it really is quite a beautiful chart to look at. We had our original short here at $73.04. We were triggered into that on Friday. We've seen the continuation of selling flow through on this stock on Monday, down at $71.38. My first target is down here just above $69 a share. Once that level is taken out, we're going to begin, much like a lot of these shares, pricing in new intermediate lows, so $62.03, and then also back to about $57 a share for Caterpillar. Here we are at $71.38. Once we break this neckline here, this is going to be a very profitable trade for us, but we have already positioned ourselves very profitably. You can see the downward trend, which has been in effect. You've got this short-term double top as well, and those macro series of lower highs and lower lows. This is still technically in a bearish trend. And when I go back, and again, this is across the board on the weekly time frame, also on the monthly time frame, is that we've got these macro sell signals aligning with these declining points of negative resistance areas, or that primary bearish trend for a lot of individual stocks. We're just starting to see that MACD cross again, so I'm very excited about this Caterpillar trade. Also moving forward and also recapping a couple of others. CVX is one trade which I'm looking forward to. 98.23 is that trigger. We still haven't technically triggered that. IBM has been a fantastic short, again triggered at 148.09 on Friday. Here we are at 143.50. This stock is going to make its way down to about 126, then down to about 118 over the coming weeks, if not months. So we're just going to be holding these trades on the intermediate time frame, which is aligning with the primary bearish trend of the three equity markets. I'm going to speak a lot more about that in this particular video. Netflix has been probably the most profitable of those trades. Original short was all the way up here at $100.09, an additional re-entry at $96.40, and an additional re-entry at $92.55. Here we are at $85.31. Our first target on this trade was $87.39. We actually hit that on Friday, but we were down a further $3.13 today, flirting with a lot of bearish re-entry. So 85.44. Personally, I'm not in the Netflix short at 85.44. And the reason why, or first, before I speak about that reason, Tesla's been another trade, 210, 200, we're at 198.55. speaking about this over the weekend to potentially lock in those profits. We are extremely oversold on this particular stock. We have a gap now, which I was speaking about how it will probably get filled, and then we'll see the continuation of selling pressure. But anyway, how do all of these stocks fit into the overall market picture? I think that's what's best to speak about. Over the next 10 to 15 minutes as I break down the market, for what it is at the moment. The most important thing to take away from this market at the moment is that we're breaking structural support. That's the primary thing, or the primary point that you can take away from this Monday afternoon market recap. You need to understand that this market has more or less been stagnant since March. So if I just draw a rectangular box, just work with me here. We've been stuck between resistance, and this is the primary resistance area, the primary resistance trend, which I have been highlighting and focusing on my own analysis for weeks and months on end. And what you can see right now through Monday's trading session is that we have effectively broken down below the bottom of that rectangular box. It doesn't come as a surprise to me. I've been very outspoken about this. It just has taken a lot of time for this to actually play out or to shake loose. What happens now? I mean, to put this in context of where we are, where we've been, where we're going, is that, look, these markets have been top heavy since 2015, all right? So the sentiment, at least, up at these resistance areas is that resistance is holding and that the short sellers are keeping prices from breaking above the technical ceiling in terms of a resistance breakout. If we go and have a look at some of these other markets as well, you can see that we have been structurally in a bearish trend since really the beginning of 2015. You can see the high, you can see the lower high, and you can see the two respective lower highs as well. You've got the lows and also the macro lower lows. Technically, we are in bear markets across the board. The S&P 500, you've got the high, the macro lower high, and again, a relative high most recently eked out. But again, you can see these upper wicks, this selling which is taking place around 2100 on the S&P 500. This is the weekly chart. If I zoom in, you can see this double top here. We've just broken the neckline. If I show you this on the Dow Jones Industrial Average, a short-term double top, but in the picture, or the bigger picture of what's been happening since really late 2014 into the beginning of the stagnant market of 2015, and to see that continue into 2016, we are just starting to see momentum shake loose to the downside. Let me show you this in the weekly time frame. It's really easy to show you this. I've shown you this over and over and over again. When you get this series of macro lower highs and you get the sell signals aligned on the daily with the weekly with the monthly, that is your best indication as to where price is heading in the future. You can see the MACD is just starting to cross bearish. The RSI is not even anywhere close to oversold yet. So again, people are looking at this market and suggesting that this is, the end of the selling pressure. It isn't. This is just the beginning of the selling pressure. And I'm not sure whether it's going to take a week, 2 weeks, 3 weeks, or a month. Your best target location for this market moving forward is the Dow Jones sitting at 15.5 to begin with, the S&P 500 sitting at 1,850, and the NASDAQ coming back down to about 4,300. Now, what happens at this pivot point down here is critical. I assume we're going to see a short-term bounce and then a bigger capitulation once we break below it. But what's most important for people right now looking at these markets is, well, what happens Tuesday through Friday? And this is, I've got two obvious scenarios. I believe the second scenario, which I'm going to speak to you, is a lot more important, or at least it has a higher probability of actually playing out than the first scenario, which I'm about to walk through with you now. The first scenario number one, is that this market just capitulates, right? The support level's broken. We come back down, we hit, or at least we just make our way, trend lower, and come back down to those previous lower lows, those targets at 15.5 on the Dow Jones Industrial Average. Can that happen? Yes, of course it can. Do I personally think that is going to happen? No, I don't. Generally, what happens is when you get such an important pivot point, and we call these pivot points because they're macro turning points for the overall market. When you establish pivot points, okay, generally what will happen is that you come back up and you have to retest those pivot points. So what I mean by that is, I'll start with the NASDAQ, is that clearly you can see the double top in context of a bigger chart topping pattern with those macro high, lower high, and now consecutive lower highs with those macro lower lows. This is the most recent pattern to work with. So if I zoom in on the detail, you can see obviously we've broken the neckline here. What happens is that price from the support level, which we currently traded into on Monday's trading session, is that we will come back up probably to 4.7. Maybe we come up to 4.750. I don't know what level this will be, but it will act as a retest of the pivot point of that macro support area, which is now going to act as resistance. And what will happen is that this is going to be the perfect opportunity for people who haven't positioned themselves for the short side to lock in that best price possible before you see the next wave of selling pressure to take these markets lower. The Dow Jones Industrial Average, you can see that we've pushed on, or at least we've blown on through support. Support is coming on at about 17.4. Here we are at 17.1. What do I think is going to happen? I think we're going to see a bounce over the coming days, maybe a week. I don't know how long it's going to take. It's most likely going to set up like a bear flag. So when we see bear flags, it'll look like this. Price will move within a very tight channel on low volume, back up into the critical pivot point. What will happen? We'll find resistance, then we'll tank and we'll sell. We'll break out of that bearish flag and we'll take out these support levels over here. You have, a decision to make. For those of you who still have your head in the sand as to what is taking place, you only have a limited time until this market really pushes in, or at least prices in lower moves or lower lows macroly. But at the moment anyway, if you have the opportunity at least to potentially hold out if you do see buying pressure and you see this coming up to 17.4, give or take a couple of points. But that's just the general wave of how I see this playing out. Something like that across the board. The S&P 500, again, you can see this macro support level. It's coming in at about 2,050. Had a lot of people emailing me. Not so much emailing me, but just writing in foolish comments saying how the market was going to break out to all-time highs. 2100 is going to be the beginning of, the continuation of the long-term bull market. It's funny how things can change very quickly. 2 days later, we're sitting down here on the precipice of breaking 2000 and most likely not revisiting 2100 for a very long time ahead. Regardless of that, that's okay. That's your opinion, as I have my own opinion about financial markets. The difference is, of course, is that mine is backed by the technicals. And what to expect for the S&P 500, much like the Dow Jones and the NASDAQ, is that, look, we're most likely going to see a short-term bounce. It's going to take us up to 2050. People are going to get really excited. I'll probably have a few people commenting on my videos saying, haha, you're wrong. Look at this, we're back at 2050, everything's okay. And at that point, and when they comment on that, that will be the next wave lower. And this will be the time where, again, the institutional, at least the educated technical traders, and of course, people who manage money as well, will be taking on those final shorts before you see the next major downward move in the market, if it just doesn't already continue Tuesday through Friday and we don't even see a bounce. So that's really how this is going to play out moving forward. The Dow Jones Transportational Average, this is a textbook of what I've been speaking about. So just say, for instance, here's the double top. And let's just say that we're right here. This is a really good example of how I can put this in context for you. So as I just spoke about the rough pattern as to how it's going to play out across the board. Just say, for instance, this is where we are on the Dow or the S&P or the NASDAQ. What happens? We come up and we retest the pivot. Now, again, it's more of an art than a science. But if I just fast forward this, you can see how the transportational average bounced. And along the bounces, you saw multiple shooting stars, for instance. And a lot of people, again, on the transports were saying, look, this is just the continuation of, not even a bull market. Technically, it has been in a bear market for a year or so now. But just as things are looking rosy, it turns very, very quickly. And we see the breaks of the support levels. 7,607 was the trigger I was looking at. Additional re-entry at 7,460. And now you can see the transports absolutely taking a nosedive after structurally taking out that support level. To put this in context, change to the weekly chart, you can see we are in a legitimate downward trend. So understand the trend is your friend. The trend is the key to unlocking market direction. What trend am I speaking about? I'm speaking about the primary trend. Understand, okay, where or what direction the primary trend is moving in, and then align your individual trades with that. Obviously, we have to work in conjunction with the intermediate trend, and the intermediate trend, friends around the world, is just continuing. So the intermediate move aligned with the current primary trend is to the downside, and that is with that structural break of those double tops which have been setting up for the past 3 months. And to see that shaking loose and the structural breakdown of that support level, which I've been referencing over and over and over and over and over again over the past months and months and months. Look, just take my word for it. Just because it hasn't happened, or just because it's taken a long time to happen, doesn't take away the meaning of what is going on in the primary and intermediate trend. All that's happening is that it's just taking a little bit longer than what we expected before we see these material movements to the downside. And again, we're starting to see that. We've been very, very profitable on individual trades. And also we have taken, or at least personally, I've taken out huge positions up here with hedges, inverse ETFs, long-term options contracts, and also futures contracts on these markets, which again, a lot of other people have done in that pro analysis classes I've been speaking about in great detail for weeks and months. And this is just the beginning of that. Over time, these profits are going to snowball, and you're going to do really well off them. So with that being said, I can quickly show you the Russell again. This is a little bit less developed. It hasn't actually been updated yet because I don't have the closing data, so I won't speak about the Russell, but just think about the Dow Jones Transportational Average at the moment, because that's the leading market, and the other three equity markets, especially the industrials, are following that very closely. And it's already trending in the intermediate trend in conjunction with the primary trend lower. We just got to see whether or not this market breaks this location or breaks this structural support and just continues, or whether we see again the foolish bounce that probably the perma bulls are going to jump on board with and just be found out at about 17.5, 17.4 on the Dow Jones Industrial Average and about 20.50 on the S&P 500. If you see the market bounce, it's like a carrot. I would not be chasing it because there'll be a lot of pain once the market reverses from that back test of that broken support level. So I think that's what I wanted to speak about on this Monday, or at this market close on Monday. A lot of people, again, panicking, fearful as to what's happening in financial markets, but it doesn't come as a surprise whatsoever. Once you read the technical charts and you understand the primary trend, the intermediate trend, and just how structurally markets need to set up before we break, or before we can break certain structural key levels, and then what happens next in terms of the trend continuing, is how you identify market trends and the beginning of trends where you can position yourself and hold these positions, which you build in pivot point areas, macro pivot point turning points, and make a lot of money in the process of doing so. So if you want to learn more about that, I'd encourage you to have a look at Pro over the weekend. I do that every Saturday. It's a recorded class, goes for 90 minutes, roughly 90 minutes, sometimes 2 hours. Where we go through individual trade analysis and just speak about the structure of the markets and what to look for week in, week out. So having said that, that will be Monday's market update. For everyone out there, stay safe. Trust in the technicals again, and also be very careful if you're buying this market. I was watching a few of the media channels this morning or this afternoon, and they were speaking about how this is a really good buying opportunity, how you've got a lot of financial companies and things like that on sale at the moment, how it's a really good opportunity to be buying in to some of these stocks. And, I strongly disagree openly. I think that is a very foolish thing to be doing up at these levels. I think this is the beginning of a bigger move, and I'll be proven to be correct in due course. It's taken some time for the market to speak for myself, but now it's starting to really speak. So having said that, everyone have a fantastic Monday evening. I'll be back with you most likely during the week, depending on whether we just see capitulation or whether or not we see this back test. I'll be back to explain it to you, but it doesn't really matter for us and people in Pro because we've already positioned ourselves really nicely. What I can do very quickly actually is just show you these monthly charts, and this is what I was speaking about, how it takes a bit of time for markets to confirm moves. Well, since about February, we've been waiting for this to happen. It has happened. So this is a bit of a bonus for people out there who are watching these analysis videos. But it doesn't matter which market I apply this to. What we have right now is price breaking below the 10 and the 20. Very, very important. A macro sell signal, which has only been, or at least only generated 3 times. This is the 3rd time since the turn of the millennium. Each and every time the signal is generated, it's ushered in a new bear market. That's just the reality of this signal. So price is confirmed. You can see how we sort of stagnated above it for about 2 months. And that was when everyone was saying everything's okay, where the market, in fact, was just simply moving sideways. They're failing to see the bigger picture. Well, price has just closed below that. So you can see right here, we're about 120 points below where the 10 simple moving averages on the monthly time frame. The S&P 500, same chart, we're below that as well. So you see this big engulfing candlestick on the weekly chart, or at least the one black crow. And also on the NASDAQ, we are very, very far below the 10 and the 20 simple moving averages on the monthly chart as well. So that's the 10 and the 20. This is taken a lot of time. I've been speaking about this ever since this shooting star candlestick right here. I've referenced it, and what to look out for in terms of a reversal. Well, that has materialized. Yes, it's taken time, but hey, it doesn't take away from the signal once it generates. No one's going to look back in retrospect and say, wow, that sell signal took 3 weeks longer than what I thought it would. It must have been an incorrect signal. No, it's not how it works. When it generates, you just need to follow it. That's how it works. So they're all bearish. You can see right here, this is the monthly time frame. If I go into the weekly charts as well, it doesn't take a lot to recognize that we've got, shooting stars up at resistance. We've got upper wicks. We've got one black crow candlesticks. We've got volume surging as well. Not only over last week on Friday with that Brexit vote, but the week before that as well. I assume this week upcoming is going to have elevated expansion in terms of sell volume as well. The S&P 500, you see that upper wick, spinning tops right at that declining bearish trend line. So the writing's on the wall, everyone. And, if you disagree with me, that's fine. But eventually, the market's going to force you to change your, your perspective of the market and at least readjust or recalibrate just what you're doing with your own personal positions moving forward. Very dangerous time for bulls out there. You've heard it from me for a very, very long time. And this is the beginning of the selling pressure. Might just have to see this rally back up to about 2050 and then, the selling to take place. If not, all-out capitulation this week. So we'll just monitor it. We've built our positions. Now we can just sit back and essentially let the profits roll in. So having said that, have a fantastic week, everyone. I'll be back with you to report on material advancements in the market. But what I look forward to are those pro classes in the weekend where we have 90 minutes to sit down and discuss this and think about individual trades as well. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.